Good afternoon, traders. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Today is Tuesday, February 28th, last trading day of the month. I think it went to our expectations. Here is the position disclosure. I got out of Meta. Meta was a new swing from yesterday that I got out of entirely. I also traded a lot of SI today, but I closed out my SI position into the close. What's going on here after hours? NVAX is only down 16% despite saying that they might not be able to be a going concern after this year. Rivian down 3.5% on incredible loss numbers. I mean, I guess they are around expectations, but these loss numbers always blow my mind whenever Rivian reports. It just gives me a reminder. They guide fiscal year 23 adjusted EBITDA, which means it's actually worse than that, at negative $4.3 billion. I mean, I think they'll make 50,000 cars. How insane is that that's able to be a business? Yeah, I think we're going to make 50 grand this year, and it's going to cost us $4.3 billion in losses. But we knew that. We knew that ever since the IPO, that this was going to be insane. Hopefully for Rivian, Jeff Bezos' midlife crisis stays intact, or otherwise this will not be able to be a company. Which is too bad, because I think the cars are cool. I like the Rivian cars. You guys think they're ugly? I kind of like it. I've seen a couple of them. I feel like it'd be a good truck to have around here, to be honest. Get me through this crazy snowstorm that I'm in right now. First Solar is our winner this afternoon, it looks like. First Solar up pretty decent on pretty good numbers. Looks like excellent guidance from First Solar. Good looking chart here too, coming off of $160. So this is definitely going to be one to pay attention to. The only thing to like about Rivian is a short. I don't know. I still think the car is cool. I guess it's personal taste, like anything else. I haven't really been in one. I haven't driven in one. I went in one once, but I haven't driven in one. All right, let's jump into today's trading session. Wow, we got a really bad close. And did we drop another $1 since the market closed? Am I seeing this right? What's hitting us after hours right now? Like, I don't think NVAX and Rivian are going to move the market. Is that closing? Wait, am I looking at the right closing price? Hold on, let me see something here. I'm so confused right now. Where'd we close? 396.41? Is that what I'm seeing on my 5-minute chart? Or 396.46 is what I'm seeing on my level 1? We're like $1 below it right now. Oh gosh, yeah, end of month futures close. Okay. Yeah, so we got a pretty not so great day today, but it perfectly met our expectations. We know our key levels coming into today. That's what we discussed in the morning meeting. I think that the major key levels right now are last week's high and last week's low. If you can clear last week's high, it's given the bulls an all clear sign. If you clear last week's low, then it's probably setting us up for a whole another leg lower. Another slightly less important spot that I was paying attention to was just yesterday's high. I thought if we could clear yesterday's high, maybe that could be a catalyst that gets us to retest last week's high / that 405 area on the upside. But we were unable to do that. The expectation for today, again, I thought the highest probability situation was that we would stay within range and be choppy. And that is exactly what happened. We stayed within range and we were choppy. The SPYs were like kind of relatively weak. That's the chart that I have up right now. We can look at the IWM and the Qs as well. But look at this SPY chart. very choppy. There's just nothing going on here. A little bit of an early afternoon rally, which led to a late afternoon sell-off that kind of brought us down to close pretty much at lows. So the daily candle today is relatively tight. It's within last week's range, but it continues. The one thing I was saying about it is that, yeah, it's a choppy day, which meets our expectations, but that if we close weak, which we did, it is maybe setting us up for a break of last week's low tomorrow or the day after tomorrow. And again, I think if we get a break of last week's low over the course of the next couple of days, that sets us up for an entire leg lower. So market, at least on the smaller time frame on the daily chart, is not looking good, and we should continue to be prepared for that. I think a day like today, which is a choppy day, can be a two-way market. You can be long relative strength, you can be short relative weakness. But what we discussed from a game planning perspective today was any trades you take to be much less greedy on what you're going for from a reward perspective. And that circles back to a question that somebody asked in yesterday's afternoon meeting about, hey, like I'm being consistent. I'm consistently going for that, big move to maximize my reward, but I'm looking at my data, and on some of these choppy days, I'd be better off if I was booking profit a little bit more quickly. And then again, my answer to that was, well, a big part of our approach to markets is recognizing that not every day is made equal, and that there's a lot of days where we are expecting more of a range day or a chop day, which is what we were expecting today, where your game plan should be a little bit less greedy, whereas on a different day where it looks like we're having a real trend day or a breakout or a breakdown day, those would be days where you want to have game plans that are more greedy in order to really take advantage of the full move that can come into the market. So again, today we actually had some great opening drive kind of trades, especially considering how kind of crappy of a trading session it was for the indices. I can talk about those in a second. Let's take a quick look at the Qs and IWM, see if there's anything different there. Yeah, Qs, not great. Also, pretty much closing on lows with another little upside tail. Same thing, very choppy morning, early afternoon rally, late afternoon sell-off, pretty much a really weak close, almost at lows. So Qs here, also not looking great. The more time you spend consolidating here in last week's range, the higher the probability, I think, of an actual breakdown. And again, last Friday's low is really important because with this market, with the SPYs, it's a retest of the backside of the downtrend. So you really want that to hold as some support. If you drew an uptrend line and kind of created a wedge out here a little bit from the October lows, we actually got below it. But that could just be a shakeout if you snap right back up and you bounce off the downtrend line. And then finally, let's take a quick look at the IWM. The only thing that had me a little bit excited at any point today at all was the relative strength in the IWM off the open. The Russell here obviously also closed weak, but at one point this was the one index that was looking like maybe this actually wants to go after the high of last week's range and kind of recapture some key levels. 188 itself is a really key level that we spent pretty much all of yesterday and all of today above. But we need this market to, again, recapture the negative Mariposa from February 21st for bulls. It's so important. But at one point today when we were at highs, it was like, wow, a little bit of a push from this market, and the IWM could lead a break higher. And where the IWM goes, we know that the market tends to follow. So I had a little bit of excitement. It was the only thing that was having me. It's like almost the only reason why I was like even trading off the open at all. It almost felt like was the IWM confirmation. This Russell was really strong off the open. We just looked at the 5-minute chart of the SPYs and the Qs, and again, just garbage, choppy action. This IWM had great strength, good momentum, created like a nice little bullish consolidation, shooting star, ADMA catches up, so it's like a time price correction, trying to get another leg higher, find a little dip, a little sloppy in here, but then looking great pretty much all day, and then in the last 2 hours here, like the SPYs and the Qs, also they ended up selling this IWM, and at the end of the day, this is also not a great looking candle. So a little bit more constructive with the Russell compared to the SPYs or the Qs, but things are, I would say overall, are actually not looking great on these smaller time frame daily charts for our indices, and we'll see how that plays out. Again, despite an extremely choppy, garbage kind of market today, which is what we expected, There were some decent trades out there, particularly in names that were in play. There was also a couple that I was a little bit surprised about. I actually want to start with the surprises. Talked in the morning meeting today about how I really don't like the XLE chart. I don't like the XLE chart. 86 could have been a spot to short versus. I was kind of mentioning that. But despite my not liking the XLE chart right now, and I would prefer to be short than long XLE, when I look at like that Chevron news that hit this morning in combination with the fact that oil was trading up earlier this morning, I'm thinking, all right, maybe we can actually have a trade here for some of these names. And that was the biggest surprise to me. I'm so surprised that Chevron could announce that they're going to buy $10 to $20 billion of stock via buybacks per year for the next couple years or whatever it is, and have the stock go from green to red. I'm really surprised at the degree to which they sold Chevron given that buyback announcement. I mean, it's just so major, and oil's green on top of it. Don't really understand how they sold this as much as they did. I discussed a potential long off 164 off the open. I hope no one got too hurt in that. It opened just above 164, so if you're in it, I hope you had your stop loss in, or hopefully you didn't get in it at all, because while it did open above 164, it very quickly got below it. So that was kind of the biggest surprise to me of the day, was the failure of this Chevron to actually be able to hold up, especially given that news, given that oil's up. But XLE I would describe honestly as a layer of probability against it. I don't like that XLE chart. And then Oxy was another one that we were kind of paying attention to in that space off the earnings report. And I thought that the earnings report was just okay, but I kind of thought that they were going to buy this thing up off of it. They also announced a $3 billion stock buyback program. The buyback programs are just insane. So and an increase in the dividend. They're really cutting down on R&D overall. It sounds like that they have a carbon capture project that it sounds like is a little bit interesting. But it's just the amount of cash and the way they're using it and how they're returning it to shareholders. A little bit surprised at the way they sold Oxy and Chevron today, but particularly Chevron. But I mean, I'm not that surprised, because again, I really don't like the XLE chart. AMC just reported. AMC trading down a little bit from where it closed. Reports Q4 loss of 26 cents versus 20 cents expected. Revenue basically 991 million versus about $1 billion expected. So misses. We got some misses here from AMC. So despite those names not working out pretty well, there's some other stuff that was on our radar today that was great. Meta, great relative strength this morning. We identified that. They had some news come out this morning. There's a couple pieces of news, I think, but the one that I thought was particularly interesting was how they said that they are implementing some sort of AI program that's helping to counter the fact that Apple has had a negative impact on their business. Awesome stuff, Judy. So this Meta was a focus for me. I had some from yesterday into today, so that was a nice little gift off the open. And then we called out this inside 5 and up here as a nice continuation trade early in the day. So this worked out really well. I ended up liquidating my position, I think, into 176, and kind of calling it a day on it. But it was a good one for me, and I hope it was a good one for some of you guys as well. It sounds like it was. AMAT, I did not get involved in, but we talked about a long versus 115 on some news in AMAT. AMAT worked pretty well if anybody was able to capture that one. Twilio was another one. We talked about a long versus 66. This gave almost 100% reversal off that momentum move, but that initial momentum move, if anybody caught it off the open, was also excellent. We talked about Airbnb too, which didn't work out as well. Kind of talking about, just going over the daily chart, like Twilio, a bunch of these names that are these growthy type stocks that traded really well on better than expected earnings, but have had bigger pullbacks along with the market to gap fills or even beyond gap fills where they created pivot points. So looking at Twilio there, especially because Twilio had some news this morning with some really large insider buying. Looking at Airbnb, which was a little bit disappointing today, but gave a decent opening move just to fail. Did Trade Desk, that was the other one that we discussed. TTD had an inside day, so the inside and up. A lot of these growth names were very strong early on. So TTD, if you're paying attention right off the open for that long, I know we called it out into the VTF very early, so I hope people were able to get stock. This gave a fantastic momentum move as well, before also petering out a little bit just with the broader market weakness. So yeah, again, primarily good stuff. The only other focus that I had personally was on SI. I called for an RDR in SI today. Oh, and I should mention Coinbase, I guess, really quick too. My thing about this SI was I felt it actually wasn't that extended away from the moving averages, which had me a little bit concerned looking for a bounce trade in this thing today. But it is trading at around 14 or under 14 with the ADMA at 15.25. But this is a super volatile stock. But it's also day 8 down off this high. So I was looking for a break of yesterday's low, like an RDR type of thing, a break of yesterday's low to buy it back through. And it almost worked like too well, to the point where I was like, oh, I'm probably going to get shaken out of this. And then it worked out really well. Yesterday's low was, I think, 71 cents. Today's low is 68 cents. So it broke 68, and there was a nice uptick back through the 70s, and that's all you needed to do is kind of take that buy. Worked this thing pretty well all day, and then I gave some P&L back here in the close. But P&L was up really nicely in this name around 2 o'clock, but I gave some back into the close, and then it just didn't close well enough for me to keep it. So I ended up liquidating my position at a decent profit because I traded it well and booked enough on the way up, but certainly gave some back in the last 2 hours as well. So that was another focus for me today, and it turned out to be a decent trade. And then finally, what we did discuss this Coinbase in the morning meeting as well. We also discussed AI. They had similar patterns. This wedge pattern in coin that was building out with an inside day. So I mentioned in the morning meeting, I know some people were more short biased on it, but I mentioned long above yesterday's high, short below yesterday's low. Like, keep it that simple. Above yesterday's high, you're breaking this wedge to the upside. Below yesterday's low, you're breaking this wedge to the downside. I tend to have a bias against this company, so I never got involved in the trade to the long side. But if anyone was able to grab some stock early on here to the long side on the break of yesterday's high, this thing gave a phenomenal move before also rolling over a little bit in the last 2 hours. Weren't for a great day. They were for a choppy, more difficult day, and that's how markets work. But being able to create the expectation, and this is really important, that it's not going to be a great day. So what does it mean? Don't be as aggressive. Don't be as aggressive with pushing trades. Don't be as greedy on your game plans. And the fact that we were able to recognize that earlier, I hope made and saved people P&L. And market kind of did what we expected, yet we still were able to find, considering it was, I think in some ways, a terrible trading session for these indices, just really, really choppy and sloppy. We had some great trades in the beginning of the day, and then I was very specifically saying after, I thought today was a day in particular to not be doing any midday trading really, or minimizing it. You kind of really needed to be there for the open today. That's when most of those great momentum trades were there and worked. Twilio breaking, coin breaking, Meta on its inside 5 and up early on in the day. By 10:30, I personally was looking at this market and expecting a chop fest. I was a little bit optimistic because how the IWM was holding in. I was looking at this market expecting a chop fest, looking at the names that were on the radar that were in play, having already given the move, and I was saying to myself, this is not a day that I should be, trading, too actively, especially midday. So again, I hope that thought process really helped make and save people money. So that is all that I've got. I am happy to answer any questions that anybody has. Anybody with any questions? Any questions about anything? It's still snowing here. If anybody's curious about that. From Kyle, was coin 60 break off the open in the first 5 minutes a valid entry? It feels like you're jumping the gun a little bit. I really want the break of the inside day on this one, personally, which is closer to 61, yesterday's high, which if you want to make the argument that if you were buying 61 it's way too much risk, I would totally support that argument as a reason to not get in the trade. But 61 is really the spot that I want. 60, I think, was maybe a little premature and jumping the gun on it. Mark D saying, I was just wondering, but I don't see what you were wondering. Did I miss something? I don't see anything. If I miss something, just... Oh, the snow? It is absolutely dumping out. It's kind of insane. It's been going on since yesterday's afternoon meeting. It hasn't stopped. And it's just like really coming down hard. I might need to get the POW flu tomorrow and make Pat do the meetings. I expect that I'm going to be here. From Rex on Yablika, Apple. I shorted Apple at 9.45. I like that short. I shorted Apple at 9.45 when it got rejected on the 5-minute ADMA. Apple today with bad news, and it was relatively weak. It had a common gap down. Do you think I was too early on the trade, or should I re-enter it with the rejection at yesterday's close? I don't like that one as much. Yeah, no, I really like your trade, Rex. I like this trade a lot. You identified, so we identified as a team pre-market that Apple is relatively weak, right? At one point, I don't remember if we actually ended up opening up or down. I think we actually ended up opening down. But when I was doing the morning meeting, when I started it, we were still positive. And I think we traded to red during the meeting, if I remember correctly. I'm just going totally off memory. But when the market was even green, Apple was still red. Apple had 2 sets of bad news this morning. More negative supplier news, and also some negative news about coming out of the EU, which is where all that negative news seems to be coming out of as far as regulatory stuff on any of these mega cap stocks. So you got 2 sets of bad news, you got relative weakness, you got a market that you can't really trust in either direction, so I wouldn't say the market was with you necessarily or against you, though you probably would have noted that the IWM was relatively strong, so sometimes everything else plays catch up, but that's like really digging deep to try to find a thing not to like about this. You know, you're not aggressively shorting early here when the stock is extended. You wait 20 minutes. This thing puts in a shooting star into equilibrium, just about filling its gap with still being relatively weak. At the same time here, 9.45, Apple's still red. The Qs have gone green. You've got that relative weakness there. The Qs also put in a not so great candle at that time, but it's in a weird spot. There's no extension here, so it's difficult to overread, or I should say it's easy to overread this candle. But I like your trade. If you were going to short something, this was the right name at the right spot. You exercised the right amount of patience. And then the market just kind of stayed strong. And Apple began to recover a little bit, right? The Qs, when maybe they didn't stay strong, they were choppy. But the IWM was still acting really well. And yeah, you know, Apple kind of held in and actually eventually went green. It was impressive at one point when this thing was at highs that they were able to shrug off that news the way they did. But long story short, I like your trade, even if it didn't work. And then for Meta, would you say the tail on the first 5-minute candle on Meta put it into the penalty box that makes you take less size on the inside 5? The reason I'm going to say no to that is because of the degree of extension, especially at highs. You know, you have a lot of price discovery and less liquidity and wider spreads, and things are moving very rapidly for stocks off the open. This thing was up so huge. You know, this first bar, this tail is almost 174. Your ADMA is at 170. It's just very extended there. It needed to be a little bit slippery. So I remember John Lee mentioning like, oh, Meta's not better anymore. And I think I specifically told him that I kind of disagree and let's be a little bit more patient with this because I thought this tail was really coming in more of the extension than anything else. So I was like, all right, let's see what happens here. Obviously, you know, if this closed red and they continue to sell it off, then yeah, Meta's not better anymore. But instead what happened was they built out that inside 5. And I remember very specifically looking to see what could be building out these inside 5s and commenting the relative strength on Meta at that time. This is a momentum trade. Make no mistake about it. Your ADMA is not caught up to lows when the inside 5 is breaking up. I generally don't like that. It's a legit momentum trade. I personally don't like momentum, these types of momentum trades where my stop loss is going to be higher than the ADMA. You guys all know that. But the thing that kind of counters the fact that I don't like that is the immense amount of relative strength and the very high relative volume. This high relative volume is a key factor in enabling momentum, right? What do we say about extension in a marketplace? A stock that's extended, how do we know a stock is extended? By how far away it is from its ADMA. A stock that is extended can always become more extended. When can always become more extended? Especially when there's volume. Why? That's what a stock that's extended and becomes more extended is the definition of momentum. It's like that's like literally the definition of momentum. The definition of momentum is the greater the price, the greater the demand. And what you typically need in that situation in order for an extended stock to become more extended is very high relative volume. It's in play for some reason. And you had that high volume, you had good news on the stock, and you had the inside 5 and up. So I wouldn't say that the tail on the first 5-minute bar would be a reason for me to take less risk on the trade, but I would say that for me, with the way that I trade, despite these other positive factors like the volume and the news and everything, a reason for me to actually take less risk on the trade was actually the degree of extension still on this third 5-minute bar when the inside 5 was breaking to the upside. So again, hope that helps. Any thoughts on Goldman either way? They wrecked this Goldman today, and the Dow, which I don't really look at, was super weak. Was there news in Goldman that I missed? Or is this just entirely technical and Dow weakness? That's like, this is an unusually high volume candle on, it was Investor Day. I was going to say, this is an unusually high volume candle and range for stock, but I didn't think had an event, but it had an Investor Day, and that's right. I remember DJ Solomon was talking earlier today. Yeah, so super weak on it. Do I have an opinion on it or any thoughts on it? This candle puts it in the penalty box. I like the banks generally. Let's take a look what the XLF did. Yeah, XLF, sloppy inside day. I like the banks generally. I mentioned in the morning meeting that I did not like that XLF got rejected off 36 yesterday. 36 is important. I need XLF back above 36 in order for me to feel more confident on the sector. Goldman is not my favorite name in the space, but it's been one of the strongest because it's a Dow component, and the Dow has had periods of really, really good strength at the end of last year and into this year. So there's some reasons to like Goldman prior to today because of that relative strength, even though it hasn't been my favorite bank. But today absolutely puts it in the penalty box. Very, very difficult to be thinking about Goldman to the long side until and unless it can negate today's candle and get above today's high. In order to do that, it's got a lot of work to do. On the short side, you could almost prefer the short side of Goldman right now, but I don't want to. I don't like day twos. I want to be involved in day one. That's what I always say. I don't like day twos. Day two, you always have a worse risk reward and lower probability of success. Sure, it could give a day two tomorrow and go to 340, and there could be $10 more worth of profitability on the downside. But I think as a rule, day twos, if you're looking for that second day, you're getting into a position with a worse risk reward and lower probability of success. Why is there worse risk reward and lower probability of success? Because in order to really give to the right spot based on the daily chart, you got to risk a lot more because today's move was so big. Why is there lower probability of success? Because the move already happened. We want to try to anticipate moves happening, not react to them after they happened. But that's why I like that kind of 1, 2, 3 play, where you get a big Maribozu in one way or the other, followed by an inside rest day, and then that inside rest day gives you continuation. So maybe you could look at Goldman if it gives an inside day tomorrow for then potential continuation on it to the short side. Or one of my favorite ways to negate actually a Maribozu is through an inside bar that breaks in the opposite direction. So if you can get an inside candle in Goldman tomorrow, I think it could be tradable in either way the day after tomorrow. That's a lot of ifs there. So for the moment, I think that there's no trade in Goldman for tomorrow. It is not going to be on my radar. From John, one of my biggest weaknesses is looking too closely what's happening right now on the 1 minute instead of longer time frames. John, I can tell you, I don't even have a 1 minute chart. I can't even look at a 1 minute chart if I want to. I have access to a 2 minute chart. I almost never look at it. And it's exactly for the reason you're saying. The time frame is just too small. You become too micro-focused. There's too much noise. It's almost too easily manipulated. I don't want 1 minute patterns. I don't want 2 minute patterns. It's too much. The 5 minute chart is the most important thing for me. Sorry, that's the most important thing for me. The daily chart's the most important thing for me. The 5 minute chart is the smallest time frame that's important to me. In the beginning of the day, that first 45 minutes or so, everything I'm doing is daily chart in conjunction with 5 minute chart. And then it's only, as we approach 10 to 10:30, do I also really begin to implement the 15 minute chart in it as well. The 1 minute chart is definitely too noisy. From Steve on Honeywell. Honeywell's put in a decent amount. Doji Day, rest on continuation down. It's hard to say. The small time frame on the daily chart, which is what I think you're kind of honed in on a little bit, is certainly weak and breaking lower. I would prefer this on this time frame as a short on a bounce back, maybe into the 196 area versus like a 198. But then when I really kind of zoom out on this, I think that this whole area on this chart is sloppy. And on top of that, I know that this is a difficult stock to kind of trade and could be a little bit thinner. So when I look at the daily chart, if I zoom out all the way to like 2022 and see this full degree of chop over the course of a little bit over a year, in conjunction with the fact that I think this is a little bit of a trickier stock to trade, it makes me just not have conviction on giving you an opinion on it and makes me not personally want to be involved in it. So that's my honest thought process on it. From Judy, in the morning when you say I sold some so-and-so, does that mean from pre-market? Maybe. Maybe, it depends. I trade pre-market. There's a good chance that I'm, especially if I'm already swinging a position, that I'm like adding to that position or taking some of that position off into the gap pre-market. So assume that I'm adding some of my position, and then it begins to go in my favor. Then I would be selling something that I had sold pre-market. But it definitely depends a little bit on the time of day, because I get much heavier and more active with my trading once 9:30 hits. So if it's between 9:30 and 10, that could be stock that I bought like right at the open. I tend to do a lot of trading. I do a lot of execution and new execution in the first 5 minutes of the day. A lot of it, maybe first 10 minutes of the day. And then if it's 10 a.m. and I'm booking profit, there's a good chance that that's actually stock I bought at the open and not necessarily stock that I bought pre-market. So that helps as well. All right, looks like we got through the questions. Anybody else have anything? We still got a little bit of time. I think is that tomorrow? When is Scott Ruther doing the? I think it's tomorrow. I think Scott Ruther is doing that Conversations with a Trader on LinkedIn. I think it's tomorrow, that Pat had done a couple weeks ago, and I had done a couple weeks before that. So if you enjoyed what Pat and I did, you want to make sure. Oh, it's on right now? I thought it was Wednesday. I'm losing my mind. All right, it's on right now. So I'll just end the meeting then, so that people can tune over to Ruther's thing. So have a great night, everybody, and I'll see you all tomorrow.